Hi traders, and welcome to my video on the weighted moving average. This video can help you understand how you can catch moves such as this one for over 400 pips and this one for over 300 pips. So what we're going to do is we're going to first put the weighted moving average onto our charts. So I'm using the MT4 platform here. You can find your moving average indicator in any trading platform. Should be built in already. So we're just going to go insert indicators moving average. We're going to use the default 14 period, and we're going to change the moving average method from simple to linear weighted. Click OK, and there you go. We have our weighted moving average. Okay, so you can change the periods if you want. If you want to see the longer term, we can use, say, a 35 linear weighted moving average. You can go even further. I mean, too popular. You've got the 50 is quite popular. As you can see how price reacts around this moving average. So we can even insert another moving average if we want to have two. Just put it on a different color. Color shall we use here? We use blue. So the 200 moving average. The 50 and 200 moving averages are two very popular ones. When the 50, this red one here, crosses the 200 in a downwards direction, it's known as a death cross, which suggests a big change in the market. And likewise, when it crosses, the 50 crosses the 200 above, is called a golden cross, suggests a big change upwards in the market. I do have a video on both the death cross and the golden cross with various different strategies you can use. Okay, so the weighted moving average, if we so we have the 200 linear weighted. Let's just change this 50 here to 200, but make it simple, okay? So what you can see is here you can see the difference between both of the moving averages and which one reacts faster. And I think you will see that the simple tends to have a faster reaction. And I mean in the sense that price will usually cross the linear weighted. I've just got my colors mixed up there. Will usually cross the linear weighted before it crosses the simple, and thus the signals can be faster, less lagging than if you're just using a simple moving average. As you can see here, we had a cross before on the linear weighted, and here we had a cross before on the linear weighted. The disadvantage to that is that you can have more false signals. As you can see here, price would cross the linear weighted moving average before it crossed the simple moving average, which some may have seen as a false signal. But there are other times and other reasons you can use the linear weighted moving average. For example, here it would have provided entries on pullbacks in this particular trend, whereas the simple moving average is just more of a basic filter for the overall direction of the trend. Okay, so we'll put this one back to 50 and weighted, just so that we know on our charts these are both weighted moving averages, and the 50 and 200, which, as I said, are two of the most important moving averages used by many traders. Okay, so how to trade the weighted moving averages. Some people will trade a crossover of the two, of two different weighted moving averages. For example, the crossover here of the 50 and the 200. But as you can see, if you just trade them as is, if you sold there, you're going to probably get stopped out. If you bought there, you're probably going to get stopped out. However, when you do catch a good crossover, as you can see from this particular move, there are big moves to be had. I prefer to wait for the trend to play out and then trade in the direction of the trend. As the saying goes, the trend is your friend. So I'm going to give you a basic weighted moving average strategy here, or various different ways that you can implement these ideas into your own trading strategy. So the first thing to do is just to use the moving averages to filter the direction and wait for a clear trend to form, okay? how I'm going to do that here is I'm going to mark resistance and I'm going to mark support. Okay, this is a triple top candlestick pattern. You can see the resistance is tested at least 3 times. We have the neckline here and then a breakout below the support or the neckline of the triple top candlestick pattern, and suggests, okay, we're in, we've got downwards momentum now. That we've had the death cross, the crossover of the shorter term 50 period moving average to the 200. We have all of this bearish price action. So we have some tweezer top candlestick patterns here. So we're looking to, all the indications are there to sell. We've had a little bit of resistance build up here. We can be confident that now, okay, the downtrend is forming. Let's go. Let's look for an entry. Okay, so we could have traded not just the crossover, but the breakout here. This could have been a potential trade opportunity using the weighted moving average as a filter. Prices below it, they've crossed each other. And I mean, you would have catched the majority of this move, which standing at over 240 pips. Good thing about this particular trade is we have a logical place for the stop loss, which is just above either this level of resistance here or even the other side of the breakout, in case there's a fake out when the price would turn back around. Okay, so it'll be around 20 pips stop loss. As price falls down, what you can do, wait for a pullback to the weighted moving average and then another breakout, and just move the stop loss above these recent highs, lock in the trade. See the price pulls back to the weighted moving average here, falls down again. We can move our stop loss and just lock in the trade for 70 odd pips. Again, have this breakout, this pullback here. Can move once price starts to fall again. We can move our stop loss and just lock in profits on the way down. Even close part of the position and bank some profits. And we can just do that more or less on this breakdown here, stop loss here, more or less trail the majority of the move until we see price reverse against us. Probably don't want to sell around this area and this area because you'd definitely be selling low here. You can see the distance between the moving averages, or already price has moved quite significant. We want to look to enter up around as close as possible to the start of the trend. That being said, you can trade on pullbacks using the weighted moving averages. So as we've seen earlier, they can react quicker than a simple moving average, which can be a good way to trade pullbacks into a trend. Wait for the trend to form as it has here. We've had the breakout. Then once price pulls back to around the moving average, then we can look to sell. There's no sweet science. Wait for price to touch, wait for price to close either side. As you can see, if you do that, here you're going to miss out on a sell trade. Same here, sell trade potentially, sell trade. I mean, you're better off, in my opinion, just looking at the candlestick patterns and just looking for bearish candlestick patterns. As I said, I've done loads of videos on different candlestick patterns you can trade, and nothing beats good old support and resistance, in my opinion. Price action, we've got the pullback there to the weighted moving average. You can draw your support and resistance. We see a nice wedge pattern there, consolidation and a breakout as signified by that large bar there. Okay, and again the same, I have a pullback here, support level, wedge pattern, pullback to the weighted moving average, and a very big breakout. You can see that lots of traders are probably watching this. I think that was the first Friday of the month as well, NFP day, hence that big powerful candle there. So yeah, the weighted moving average is just a real basic tool for, I'll be honest, for doing this. I mean, you can just draw the trend line yourself if you want, which is probably why it's a good idea to have two on the chart, just so you can get a better idea of the overall trend. A longer term one, 200 in this instance, and the shorter term one, which is the 50 in this instance. Okay, again you have a pullback here. You might not necessarily trade, as I said, as soon as price closes above or goes above the moving average. I mean, you could have if you did that there and put your stop loss up here somewhere on this level of support that was breached. However, what I would personally do is I would be marking the support along here and just waiting for a breakout. You've got a nice spinning top candlestick pattern there. I think that's, yeah, you can see up candles, small down candle, and then the bears and the breakout there. But again, by now we're seeing the trend has been going for a while. Ideally we want to get in somewhere around here. Okay, so that's just one of the ways you can trade with the weighted moving average. Okay, you can of course add other indicators to your chart, stochastics, ADX, and just time your entry based on those in the direction of the moving averages. I'll just give you an example here. So the stochastics, you basically look to sell when the price is in the extremely overbought zone, in or around this zone here, the 80 level. You want to cross over of the main line and the signal line to the downside. Okay, so if I just zoom out. So we'll look for stochastic crossover in and or around. We had the MA cross here, moving average cross, stochastics near the extreme, crossing over down. That just confirmed the entry that we were saying here on the breakout. Okay, but then as you go down, you can use the stochastic for entering when it crosses over, ideally in or around the extreme zone. So you have a crossover there, as you can see, would have been a good entry point there to the downside. Had this pullback here. Probably would have not taken this just simply because price is on the other side of the weighted moving average. That's one thing I should have mentioned before, is really you want price to be on the correct side that you're looking to trade. So if you're looking to go short, sell, you want price to be below the moving average. Okay, so the stochastic here did crossing the extreme to the downside, price crossed the moving average. So this here would have been potentially a nice entry point, as you can see. That's just price just fell off that ledge there. Do have another wedge pattern, almost a diamond formation there, and that would have been an entry based on stochastics within the trend. And yeah, and then we have price up again above the moving average. Probably a bit late to the party down here, but nonetheless the stochastic did pick a nice overbought crossover trade there for around 20 odd pips. Okay, so you can use indicators, basically the weighted moving averages, to filter the direction of the trend and time an entry with indicators, or as I say, I like to just use price action and candlestick patterns, support and resistance. If we go back to the golden cross that we had here, so the golden cross again, you have the weighted moving average crosses above the 50 weighted moving average, crossed above the 200 weighted moving average, and this signified an uptrend. This was partly due to the this big candle here, so we would have wanted to have waited for price to sort of, stabilize. You can see it is, I'm not going to say an artificial move, but you just want to make sure that this is an actual trend, and then there was a big range. So we wait for price to pull back, see how it's going to react. We can draw our resistance level here. We have a pullback all the way to the 200. You can see the significance of the 200 line, where price is, deflecting off it. Basically, a lot of traders are using this 200 moving average as a guide. So we could again time our entry. We know that we're looking to go into this uptrend, so we can use a breakout of the resistance, whether you want to draw on an angle, or if you want to be more traditional and just draw it like that, that's fine as well. Resistance, and a breakout. So I'll just move this one to avoid confusing you, if I haven't already. 50 MA, moving average above the 200 MA. Price is above resistance level. We're in an uptrend. Breakout, that's the entry. Okay, simple as that. No need to overcomplicate things. If you would have taken that breakout entry there, 250 pips, nobody's picking the top there. If they are, well done. But you can see when this price started consolidating and we had a pullback below the MA, you might have been looking to exit the position. Certainly you would have on this cross there, but more than likely before. Again, I would have been trailing price below this support on the way up. This level, this level, this level. If you made it this far, well done, but you know, it's still a good trade with plenty of opportunity. You can always close part of the position on the way up. MAs can be, moving averages work best, no surprise, when there's a trend. Okay, when they're squiggly wiggly and markets are ranging and consolidating, you just really, I don't think moving averages is going to be much use. However, for trend trading, they can help you to catch some really good moves. The thing is, they're not going to tell you exactly when to buy or when to sell. I just use them as a guide to determine, okay, is there still some gas left in this trend, and which direction am I going to be trading in? But at the same time, as I said, there's a simple trend line will do something very similar. Okay, if you did miss out the initial entry, there's obviously ample opportunities on the way up to re-enter. You see the resistance here, then we had the breakout back above the moving average. You know, trend within a trend here. Nice upwards momentum. Almost a diamond formation would have formed there, and you know, pull back to the MA, trade the breakout, pull back to the MA, trade the breakout. I mean, there's no coincidence that you see these big candles here. Can you see those? Traders are watching these levels and trading the breakouts. See? Oh, what have I done there? Let's keep it basic. There we go. See, breakout, and another example. Pull back to the MA and look at that breakout there. Everyone's getting some love from this trend. Okay, some are late to the party. Some VIPs got in early, but either way, there's plenty to be had for everyone. No fancy indicators needed. But as we did with the downtrend, you can pop a stochastic oscillator on your chart with the stochastics. So with the stochastics, if you're looking to trade long, buy trades, you want price to be in or around this oversold area and to be crossing to the upside. So let's just mark off. So it happened there. Would have been a good entry, coincided nicely with our breakout, just would have been extra confirmation. Okay, then we wait for our pullback to the MA. Nice crossover of the stochastic main line and signal line below 20, so it's oversold. It would have been a great time to enter this trade, although saying that the price is still below the moving average. I mean, you're not leaving much on the table if you just wait for confirmation of this breakout here, which is, as I said, it's good to combine price action indicators, candlestick pattern, support and resistance, because there'll be instances where one may keep you out of trouble. Okay, you may miss a trade here or there, but you can use your intuition as well. This pullback here is a crossover near the oversold level, potential entry point there, price is above. We're all in agreement here. We have a breakout as well. Same here, nice pullback, some bullish candlestick patterns. Got a hammer pattern there, spinning top, and various others. Got inside bar. Okay, crossover there. And then you could say, well, you know, it's above the moving average here. It's crossed over. It's oversold. Zoom out. Okay. You're going to be buying high by the time you're up here. Okay. And that's not what you want to do. Don't buy high. You know, buy low. Be the VIP, get in early. Plenty of other opportunities will come, as you see with this sell trade not long after, with this sell trend. Okay, well, hopefully you've learned something from this video, different ways to use and interpret the weighted moving average. Basically, I use them to spot trend direction, something which you can also do with the trend line, and then look to time the entry based on pullbacks in or around the shorter term moving average. You can use them on any trading instrument or chart time frame. This is the 1 hour chart time frame, which I like to trade because I find the signals tend to be more reliable just due to the fact that there's more price data accounted for compared to, say, the 5-minute or the 15-minute, and it also means less time chart watching, which is always a bonus. Thank you for watching. Please like and subscribe for more. Catch you on the next one.